Good afternoon, everybody, and thank you for joining us for Your First Home, the Proven Path to Home Ownership. It's really a first-time home buyers class. So the whole purpose of this is to answer your questions. We're here as a resource to help you jumpstart your home search or help you think about what it is that you need to get in order to start your home search. So please feel free to ask questions. If you're not comfortable unmuting yourself, then go ahead and put the question in the chat. But we're going to cover a number of things today. First, I'll just, oops, come on. All of a sudden, my thing doesn't want to move. Sorry. Hold on. There we go. So first, we're gonna kind of cover a little bit. I'll introduce ourselves first, and then we'll kind of go into what our subject matter is going to be. I'm Jamie DeSimone. I'm with the Homes for All team at Keller Williams Capital Properties. We're headquartered in Fairfax, Virginia, and I also serve Washington, D.C. So Virginia and D.C. We've been around. I've been in real estate for about 11 years, and I serve on the Northern Virginia Association of Realtors Board of Directors and have done some other things. And anybody who follows us on social media, my hashtag is Cat Wrangler Realtor. And you will know that I also am a kitten foster for the Animal Welfare League of Arlington. So if you ever need a kitten fix, then you want to follow us on Instagram or Facebook and see who the kittens are that we have. My colleague here is Rebecca Stogdill. And Rebecca, why don't you take a moment to talk about what your background is?
So I am also obviously on the Homes for All team. I was a teacher for 24 years, and I've been doing real estate for a couple of years, but started full-time last June, and walked away from teaching. So I'm enjoying it, and that's my background.
Great. And Rebecca's really wonderful at working with buyers. Melissa Hoover is our lender who is joining us today from Mission Mortgage. Melissa, why don't you take a moment to tell them about yourself?
Sure. Hello, everyone. I am been in this crazy industry for, it says 25 years on my bio. I stopped counting after that, but I've actually just celebrated my 30th year last week. I've done pretty much all aspects of the mortgage industry from the initial stages, just like you guys are in terms of understanding the buying process, to jumping in and learning the origination and processing and all the details that goes into buying a home. And I guess you could say I love it after all those years. So thank you for having me.
Well, we're happy to have you because Melissa is a wealth of information. And as you have questions, as we talk about things relating to the lending side of things, which honestly, there's really two sides to home buying, right? The lending side and the real estate agent helping you find your home and negotiate your contract side. So big part of it is the lending side. So please be prepared to ask Melissa questions. She's been in the industry a long time and she's really a wealth of knowledge. But anyhow, congratulations, because here you are. You've already taken the first step, right? A lot of times I talk to first-time home buyers, and what I find is that they're just scared to pull the trigger on pulling the trigger. So, I'm happy that you're here with us today, and I'm happy that we can answer questions for you. But there's nothing to be scared about. We're all here to answer your questions. There's no obligation to work with us. There's no obligation to do anything, to go buy a house tomorrow. But please let us answer your questions and let us help you at least continue along that path of exploration. We're going to cover kind of the fears and facts that a lot of people have about real estate, the realities of our market today, the actual paths to home ownership, and then the next steps. So what are our fears versus facts, right? So you hear a lot of things. I mean, don't even get me started, right, Melissa and Rebecca, about the news, because the news will say things and everybody's panicking. I'll get to kind of what we have on the screen, but one of the things everybody's hearing right now is that the housing market is slowing down. Have you heard that, Rebecca?
On the
news is all about doom and gloom. Is the housing market slowing down? Well, actually it is, but what they're not telling you is that it's slowing down because we don't have any inventory. So if you only have 1,000 things to sell, you can only sell 1,000 things. Last year we had 2,000 things to sell, so we sold 2,000 things. So is it slowing down overall? It is, but it is not slowing down as far as turning into a buyer's market, at least in this area. Lucy, I know you said you're joining us from Indiana. The things are different around the country, and I don't want to speak specifically to your market, but I will say that at least in the DC metro, we have a shortage of inventory. We are still struggling with inventory, and nice homes are still going multiple offers over asking. But we'll kind of touch on the market again. One of the things are, a fear, right? Everybody's thinking, well, I can't afford to buy a home right now. Well, maybe you can't. I'm not going to lie to you. I'm not going to tell everybody, hey, you're going to wake up tomorrow and go out and buy a home. But the fact of the matter is you don't know what you don't know. So that's what we're here to answer some things for you. I've mentioned Melissa a few times. She can run numbers for you. Pull a home that you're interested in off, everybody's looking on Redfin or Zillow or whatever. And if there's a home that you've been stalking, send it to her. Ask her to run the numbers for you to give you an idea of what your payments would be, what your down payment would be, things like that. Because again, you don't know what you don't know until you start asking the questions. That also ties in with not having money for a down payment. Well, there's a whole bunch of down payment options out there for you. First and foremost, depending where you are, sometimes there's first-time homebuyer grants. Now, granted, those are capped at a maximum income. So I kind of joke that if you can afford to buy a really, really nice house, chances are you will not qualify for a first-time homebuyer grant, but that's fine. There's also tapping into your 401ks. I am not a financial advisor. I will never tell you to do something. I would always instruct you to talk to a financial advisor first. But I bought my first home back in 2001. 2001, I bought my first home. And I did that partially by pulling money out of my 401k at the time for a down payment. That property, which I still own as a rental property, has appreciated. It's doubled in price. So do you think I made back that $10,000 I pulled out of my 401k? I did. So I'm just saying that that's an option. I'm not telling you that that's something you should do. A lot of people have family that are willing to give them a little bit of money to get started. There are also, depending if you're a first responder or other industries, sometimes the lenders have kind of special deals or special promotions that will help cover some of the closing costs for those professions. So there are ways of doing it out there. And the biggest thing, and we'll get into it also, is that you don't need to have a lot of money. You can buy a home for as little as 3% down, and that's not really that much. So we'll kind of dive into the numbers. Should you wait until the market gets better? I've been in this market for 11 years. It hasn't gotten any better. So you can try to wait another 11 years, or, if you can predict the market, then I say, go ahead and wait. And I'm going to come to you for investment advice. But honestly, the best time to buy is always today. And if you ask anybody, they're going to say the best time to buy was today, because either the interest rates are going up or the prices are going up. So regardless of how long you wait, you're going to pay more one way or the other. And sometimes people are worried about their credit. Well, that's a valid concern, but it's not super hard to clean up your credit. One of the other things Melissa does is when she pulls your credit to see if you're qualified for a loan, she can actually look and tell you what simple things you might be able to do to get your numbers up. And something, you can go on to freecreditreport.com or creditkarma.com and get your credit report. Just know that those numbers are not necessarily the mortgage credit numbers. Melissa, do you want to touch on that for just like kind of a second?
Sure. think of it, I think the easiest way to compare that is lenders and banks are required to have the most up-to-date version of those credit scoring models. In comparison to a commercial, like Credit Karma, what have you, they are not required to have that level. So you're going to get a little bit of a skewed report. It's not going to be as aggressively reviewed to give you real scores. It's great as a monitoring system. I think that's probably the best way to utilize that system. But when you're getting serious in terms of taking on debt, even just a car, going into a bank version, your bank that you bank with, getting a credit report through them or through a lender for a mortgage is your best stop to see where you are now. And if there's things that need to be addressed, you can take care of it right away.
Yeah. And it really isn't that hard sometimes. And it's not always about paying off all of your debt. Sometimes it's just paying enough down to get it below a certain level. And honestly, there's a lot of numbers that move around. It's kind of a weird shell game, if you ask me, but there are ways to get your credit score up. Sometimes people think they can't afford to buy their dream home. Well, you probably can't. I'm going to be very blunt with you. You are not buying your dream home first out of the gate. The home that you buy today, if you've never purchased a home before, is probably not the home you're going to die in. So the best way to look at that is a ladder to your dream home. So until you start actually creating some sort of mechanism for building equity, you're not going to build your way to your dream home. Sometimes people are only 1 or 2 properties away from their dream home. So, my first home, as I mentioned before, bought it in 2001, and it was a 2-bedroom condo in Falls Church, near a bunch of religious institutions and kind of not in a walkable area. And if you had asked me what my dream home was, I can assure you that that was not my dream home. But you know what? I've leveraged that equity and I've kept going. So that's really, when you talk to people who are in their great, fabulous dream homes, chances are they started off somewhere else. So don't let that thought dissuade you from kind of getting in there. Sometimes people are worried about their domestic future, right? Are they going to get married or have kids or all these things? Well, you know what? We don't know what's going to, people might want to move across the country. You don't know what you're going to want to do a year, 5 years, 10 years from now. Life throws you curveballs. All I can say is if you anticipate being in the same area for 3 or more years, that it's okay to buy a home. If you are planning not to be here for more than a year, then I wouldn't bother buying a home. And I say here, but wherever you are, if you're planning to move very quickly to another location, then don't buy a home. Otherwise, everything else you can work around. Keep in mind, it's just as easy, honestly, with our market the way it is, it's just as easy to sell a home as it is to get out of a lease. And I'm not joking. Leases usually require, you're going to lose a security deposit. You may have to pay 2 or 3 months of rent as a penalty for voiding a lease. You're going to be able to sell a home once it's market ready in 30 days. So the way I look at it, it's not any more difficult to get out of a home that you own as it is a lease. People think that buying a home is way too complicated. Well, if it was super easy, everybody would be doing it every day. But I have good news for you. You have Rebecca, Melissa, and I to help you. That is why you work with a real estate agent and a great lender, is because we do make it easy for you. Interestingly, I just showed, I should have had it here. It's actually, I don't know where it is, but I just closed on a home yesterday, and I got the sellers gave me a card, and they said, you made this so easy. Like, you totally made this stress-free and easy, like you promised. And that's our job. Our job is to make it look not complicated, so that you can just kind of move forward in your thing. I do always tell people, not to throw Melissa under the bus, but I always do tell people that the hardest part of the whole process is when the lender starts asking you for all your information. And then the underwriter, who is a person they keep in a dark cave and they don't feed, comes out of their dark cave and they start yelling at Melissa to get more information. So I will say that's the most stressful part of the process, because next thing you know, they're like, we need a bank statement from 6.5 years ago and a pint of blood and 3 hair cells. So, but we warn people about that ahead of time. You're prepared, it happens, and you're like, okay, I knew this was going to happen, and you're all ready. And then lastly, some people fear about the student loan debt. Obviously, Congress, right? They just had that, they squashed the repayment of all those student loans, which is kind of a bummer. And I know that Biden has some other plans for trying to alleviate some of that debt, but it doesn't stop you from buying a home. And Melissa, how often do you help people who have student loan debt buy homes?
Nearly every single person.
Yes.
Whether it's theirs or their children's, we have ways to get around it. There's repayment options that I know that will kind of, all of those repayment options will be kind of coming back to life because everything's been in deferment. So there are ways to get around, not taking that full hit, or if you've got some deferment options, we can take that lower amount that's available to you. So it's not a no. It's just a little different way of how we calculate the actual debt against you.
Yeah. So don't let that scare you off. We have ways of getting around that. I'm sure that there's other things. I don't know. Rebecca, do you hear of any other things that people are like super concerned about that we didn't talk about?
That we didn't talk about. I don't think, well, I mean, people have been talking about mortgage rates, which, I mean, you're about to talk about that.
Right. So mortgage rates have gone up. That is true. I am not going to lie. We have seen them go up. They will never be, well, I shouldn't say, never say never. We don't anticipate, we don't predict that they will ever be 3.5% again. That ship has sailed. And from I don't want to get into a whole long economy discussion, but besides the obvious supply and demand, which talks about our housing prices, there is something to be said for when our interest rates are too low. That means we're having other economic issues that we're dealing with. We actually want the interest rates to be where they are because you have a better chance of getting a home. Rebecca, what was going on when all those interest rates were 3.5%? How easy was it for a buyer to get a home?
Oh, it was hard because all the buyers were trying to get homes. And so you ended up going to see a bunch of homes if you were a buyer. Your agent was writing multiple offers, but the offers that other people were submitting were over asking. And, it was a tough time to be a buyer.
Right. I have one client that I wrote 18 offers for until it was accepted. And it wasn't, and they were waiving all their contingencies. So when the interest rates were low and the money was cheap, everybody and their brother jumped into the home buying game. Part of the mentality for raising the interest rates, besides the fact that kind of all these things work together in conjunction with the grander scheme of our economy, that part of the impetus of raising these interest rates is to slow the market down, because it was moving so fast and the prices were increasing so quickly that we were actually going to create a problem that way. So that goes back to saying we don't anticipate seeing the interest rates go down. May they hover around the 6s again? Like right now, we're kind of looking at 6.5. Yeah, very, very much. There's definitely certain loans, VA loans, depending on what's going on and how much people are putting down and kind of what's going on right at that moment, might be able to get something a little bit better. But when I say a little bit better, you might be talking about 10%. So don't let that scare you. Another way of looking at it is that when these buyers were in a frenzy over all these properties a year ago, 2 years ago, we also had people that were having to come out of pocket. So let's just say, for easy math, a property was for sale for $450,000, and they offered $500,000, and maybe it only appraised at $450,000. They had to come out of pocket with $50,000 to cover that gap. Well, that $50,000 of cash would offset this mortgage raise. So the rate has gone up, and now all you're doing is taking that large chunk of money that you would have to come up with to beat all these other offers and amortizing it over the 30 years that you have the loan. That's kind of how I look at it. I'm sure there's other ways. I don't know, Melissa, do you have any other kind of ways of looking at that?
I think that all, in addition to that, I think that's a good way to put it in perspective in terms of just the cash outlay. I think also taking into account, yes, we have our higher rates now, but your offers now may be at list price or maybe a little bit more. So instead of maybe a $50,000 over ask price and having a 3.5 interest rate back then, and maybe having 6.5 now, but only having to put $10,000 more and the house appraises, so it's not out of your true savings. That increase, there's so many ways to offset that, and so that cash outlay, that's usually what people really were hurt by. It's just writing a check and just hoping that that money would be made up over time, and it will be. I think we're in a great market for that. It's just that initial shock, it just got a little crazy, unfortunately.
Yeah, it did, and you probably heard everybody had to waive all their contingencies, and things have slowed down a little bit. Now we actually see home inspections happen. So, it's not a bad thing that things have slowed down. You're obviously buying now, you grow your investment, right? Every penny that you're paying towards your principal is equity that you're creating. And there's not only that, but like the down payment that you're putting down, that's equity already that you're putting into your property. So as you're paying it off, you're creating equity. You can now draw on that equity for other investment options. Say you want to leverage that now into buying your dream home or working towards your dream home. Or I've seen people use that equity for investing in businesses or doing other things. Again, I'm not a financial advisor. I'm not telling you that's what you do, but I'm just saying that once you start creating that equity, you create investment opportunities for yourself and growth. That's really kind of the quickest way to build wealth in this country is through home ownership. And that's how you're starting it. And then obviously there's the pride of home ownership. And really it just comes down to stability, right? I don't know how many people have had to move because the landlord has decided that they're going to sell, or they just keep raising their rent to a point of ridiculousness. You can do whatever you want in the property. Now you can, paint that fuchsia wall and do it. I mean, now if you live in a homeowners association, don't be getting crazy and thinking you're going to paint your house purple, but that's a whole different story. But you have the ability to do that. And then it goes back to this tax benefits. Don't forget, you get the tax benefits of owning a home. So now you're able to write off your mortgage interest income. And I would like to take a little sidebar here to say, as I mentioned earlier, I'm on the board of directors for the Northern Virginia Association of Realtors. You can thank your realtors for making that tax benefit available. That is something we lobby hard for to help homeowners. So just wanted to throw that little plug out there. Anyhow, so mortgage percentage. We talked about this. I don't want to belabor it, but right today, we're probably looking at about a 6.5% interest rate. Historically, it's been high. My parents bought their home at 18%. You've probably heard of people buying homes at 20%, 14%. So we are not by anywhere near those levels as we were in the past. Melissa, is there anything else you want to throw in about kind of interest rate movement?
I think that it's volatile. It has been volatile for years. Even when the rates were really low, we had days where one day we 3 and maybe the next day 3.5. So when your mindset is down at that 3.5, it makes a big difference no matter who you are. I mean, especially if this is your first home and you're budgeting for 3% and in a few days it's 3.5. It's just our mindset now has to shift to our norm is in the mid sixes. So it's education in the front end, knowing what your numbers look like, determining your budget. And then when you go look at homes, I'm going to give you a range. So there is no surprises. So, okay, in that, if I look at a 350 house and it's a $400,000 house and the rate shifts by you know, before you look at homes, you know what that range is going to be. So there isn't that sticker shock in the process.
Yeah, thank you. Yeah, and the other thing I'll say, you don't lock your rate until you go under contract on a property. So there is the option of, I mean, Melissa will be watching the rates, right? And after you go under contract, depending what's going on, she may tell you to wait a couple days to lock a rate, or she may be able to do one relock. That's a whole, we don't need to go down that path, but there are options. Like, she's watching that market and she's trying to get you the lowest rate possible. So the day that she gives you a quote might not be exactly what's going to happen on the day you go under contract. So there is going to be a little bit of flexibility in there. So owning. Now, this is kind of, you know, you could be paying a lot less for rent. You could be paying a lot more for rent. Heaven knows, I work with people that pay anywhere between $2,000 and $6,000 a month for rent. So we just kind of picked a middle range here for some of the like nicer apartment complexes. But, you know, if you purchase a home for $450,000 and you're paying $332.50 a month towards your mortgage, so I'm saying total, like you're all in, and say it doesn't change, you know, over 30 years. This is where that amortization schedule comes in, which we'll talk about. You don't ever want to look at the amortization schedule. It's scary. But over that 30 years, you may pay a total of, this is kind of a moving number. I just took the math and multiplied it by the number of months. You would pay $1,170,000 for that home. Now it's appreciating at that same time. Over 30 years, that home was probably going to triple in price. They often say that every 10 years, homes will double in price. That's not a hard and fast rule, but you do see that. And I mean, in the past few years, we saw huge increases in home values. So over that year, don't forget your $450,000 is now worth a whole lot more. Well, if you were renting for that same period of time and your rent never went up, there's $1 million that you paid to your landlord and you literally have nothing to show for it. Nothing. You walk away, you move out, and you have no equity, you have no nothing. So that's an extreme example, but just thought I'd throw it out there because that's, I think, what people forget is, and even if you buy a home and let's just say your house payment is $3,000 a month, and maybe you're only paying $2,500 a month for rent. Now, you still need to make sure that that's a payment that's comfortable for you, but your rent is going to keep going up, right? Your mortgage rate is that's a fixed mortgage rate that you're doing, or a fixed mortgage sum that you're doing, right? Your principal and your interest aren't going to change if you do a fixed rate loan. And now your taxes may adjust a little bit, your homeowner's insurance, but those are minor in comparison. And so you're going to grow, your salary is going to increase, and you're going to grow more comfortable in that range. Whereas when you're renting, they keep raising your rent. You keep chasing after that price change as it keeps to go up. So, so why would you hold off on buying? Well, if you're changing jobs or if you're changing careers. So we run into this. Heaven knows I had a career change. That's why I said I've been doing real estate for 11 years. Prior to this, I was in association management for 20 years. It probably would not have been a good idea for me 20 or 11 years ago to say, hey, you know, I'm going to buy a house and then quit my career and go change careers. Makes it, especially being self-employed, that's a whole different thing. But it makes it very challenging for the lenders. And then changing jobs a lot is difficult. Unless you're in the same industry and you're doing like kind of a smooth move, they can usually be okay with that. If you are, if your credit score is really low or just on the cusp, you may want to get it up a little bit higher before you go jumping in. Maybe what you really want or what you need is going to make you too house poor. We don't want you eating ramen for the rest of your life. So although ramen's good, really like it, but that's not the point we're not trying to tell you go buy a home and go be poor. We want to help you make this all work out for yourself. And then again, if you're not planning on being here for this area, I can comfortably say 3 years. A lot of places they'll say 5 years, but I have yet to see, I've had people be here for 2 years and sell a home and walk away with a little bit more than what they paid on the property. And I once had a gentleman who worked for Exxon, who was a numbers guy. He still works for Exxon. They got relocated. They relocated the whole company from Falls Church to Texas. And he had bought a condo with me knowing that they were going to be relocated. And he created this whole spreadsheet of how much money he was going to put down, what he was going to be paying in interest, the whole works, his condo fees and everything. And he ran this whole spreadsheet for the couple of years that he lived there until we sold, and he still made money. So I just thought that was kind of an interesting exercise because I never saw anybody do it to that nth degree. But that's, again, no guarantees, but I have yet to see anybody like get really hurt with something. Unless you're doing a 0 down and you're doing some sort of weird interest-only loan up front, which they don't really do interest-only, but they do ARMs. So there would be a scenario in which case you could get yourself in a little trouble, but we would not want that to happen. So we will avoid those things. At any rate, so this is the realities of the Fairfax County market. I can always get into specifics with you about your particular market. So, you know, if you're interested in going to Prince William County, or if you're interested in going to Loudoun or wherever, but they're all not too far off. So our average home price, and this is across the board, this is all as of June, as of the end of June. The average home price in Fairfax County is $819,000. Now that includes places like Great Falls and McLean that have $5 million homes and little tiny $150,000 condos. So that's the average. The average home price of a condo right now, just condos, is $390,000. Again, you can find things cheaper, you can find things more expensive. That's straight average. The interest rates, as I mentioned, about 6.5. Days on market is 11. So you're seeing that things are still moving really quick. That is a strong market. And then the most important thing, if you've ever taken any economics class or listened to anything, you know that supply and demand is the #1 driving indicator or factor in economics and pricing. Well, if you look here, it says the buyer's market versus the seller's market. We have 1.4, like 0.04 months of supply. A balanced market where you see homes sitting on the market for a while in Northern Virginia, DC metro area, we consider a balanced market about 4 months of inventory. Nationally, they consider it 6 months. We just have a little quicker moving market, so we can do 4 months. 1 month of inventory tells you that we don't have very much inventory. Am I helping people buy homes? Is Rebecca helping people buy homes? We're totally helping people buy homes. So don't let that scare you off. I have 4 people buying homes this week. So people are buying homes. Melissa's getting people into homes. I'm not trying to scare you by any means. I'm just stating the realities, because some of those realities have an effect on the advice we would give you when it comes time to write an offer. So 10 easy steps to homeownership, right? You make the decision to buy. Find your agent, you secure the financing. Hello, you got 2 things checked off that list, hopefully 3 when you make the decision to buy. We sit down, we identify your criteria. We start looking at homes. We find the home that sing this to you. We make an offer. We get as much due diligence out of the way as we can. We'll talk about that a little bit more. Then we close, right? That's the day you get your keys. Then you move in and you protect your investment. And hopefully you enjoy a lifetime of service from Rebecca and I and Melissa, in case you ever want to refinance or anything like that. We are your real estate agents for life. I apologize today. You are stuck with us forever. It's such a bad thing. We do have apps that you can use. We can send this information out to you, but you don't have to write all that down. But we do have an app that you can use to do home search on your app. We can also happily set you up in an MLS search so you get information as quick and live as possible out of the multiple listing service, which is the system that we all use to input the houses for sale. So it is the fresh information. So you make that decision to buy. We've already talked about why you would do that, right? I don't need to keep going into that. Understanding your equity. So you start creating that equity the minute you put a down payment on your home. At year 22, which I know sounds weird because it's a 30-year mortgage, but if you ever look at an amortization schedule, I don't know if you can see me, but the amortization schedule, when you first start paying your loan, you are paying off your interest and your principal. And the longer you have it, this is how your payments go. So when you first start paying off your loan, you're paying more interest than you are principal. And the longer you have it, you're paying more principal than you're paying interest. So that's why you're only half paid off at year 22. Keep in mind, that's if your home is not appreciating. So is it still only half paid off? Yes, your mortgage is only half paid off for what you took out the loan for, but your home is appreciating as you own it. So you get to a point much sooner in which you only have half of your home value left to pay, as well as the fact that you don't have to be there for 30 years, right? People often in this area don't stay in their homes for more than 7 years. So don't necessarily look at it as a 30-year commitment if you don't want to. You find your agent. Hello, ta-da! Yay, jazz hands. Me and Melissa, me and Rebecca, we got our jazz hands going for you. We're here. We, as your agent, we're going to educate you about the market. We're going to talk to you in depth about what your needs are. I will do things like, why do you need to have storage? Or why do you need to have a 2-car garage? Not because I'm doubting your need for a 2-car garage, but I really want to find out, is it because, in fact, you want to put 2 cars in it? Or is it because you have 2 kayaks that you want to store? So we're going to analyze why you want things, what you're looking for, where you want to be. We're going to help you find those homes that fit your criteria. And then we're going to coordinate all the work of the other people that go into this process to get you to settlement. So there's a lot of moving parts that happen. They say that, I forget what the exact number is, but for every real estate transaction, there's something like 30 people involved. So that's a lot of people that are kind of moving the wheels along. You are not talking to all 30 of those people. We might not be talking to all 30 of them either, but we're talking to a good portion of them. So we're kind of keeping that thing moving along. Lastly, we're going to solve any problems that are coming up. So we want to make sure that if there's an issue that happens, that we take care of it right away. There is a buyer's representation agreement. So when you first start working with a real estate agent, we're going to ask you to sign what's called a buyer's agreement. That honestly, it's really just a setting of expectations. It's a mutual expectation setting. The point of it isn't to force you to buy a home. It's actually very non-committal. It will not force you to buy a home. There is no obligation to buy a home. And all it does is kind of lay out what we expect from each other. It is a mutually exclusive agreement though. So when you choose to work with a real estate agent, that is your agent, and you're going to go to that person for all of your needs. So if you see a property that comes up on the market that you're interested in looking at, you call us, not the listing agent. Because frankly, you don't want to work with the listing agent. Rebecca and I, although I do listings, Rebecca, we both do both sides of things. We will never do both sides at the same time. That is called dual agency. We will only represent one side of a deal in a transaction. So I am only going to represent, if you are my client or you are Rebecca's client, we are only going to represent you. We're not going to represent the seller as well. And then there's other disclosures that we would give you that are informational in nature, but they're about the home buying process. They're required by the state. So you would get all those things when you want to start your home search. The nice thing, I've never had anybody want to fire me, but if you decided at one point along the way that you don't want to work with Rebecca or I anymore, you would just have to say, we don't want to work with you anymore and we want to avoid the agreement. So it is very it's, you know, we're not going to come after you. We don't want to work with people that don't want to work with us. I'll happily say that I have not had that issue, thank goodness. So we want to make sure that we keep all of our clients happy. When to hire your agent is really when you're ready to, when you really think you're kind of ready to start pulling the trigger. Now, does that mean you're going to go look at a house tomorrow? Not really. But as soon as you want to start kind of moving down this path, that's really when you want to bring your loop an agent in. Because sometimes people, in my experience, I find that people want to, or they make assumptions, right? They might make assumptions about all sorts of things because they're not talking to me on a regular basis yet. And now they're putting off something, or they're doing something incorrectly because they're making assumptions, when if they're having a regular conversation with me and they're trying to move forward, I'm going to kind of help keep them on the path. So you start working with us, we get your finances in order, you get your pre-approval, you take that ownership, you go under contract. It's really that whole process. Once you go under contract until you own your home, it's really only 30 days. So that part happens pretty quick. The other part may take longer, but the home buying process itself goes pretty fast. Your agent's team, you're going to have the agent, there's going to be a seller's agent, there's going to be a lender, there's going to be an appraiser, the home inspector, contractors that may be needed to make repairs. Sorry, I need to drink water. Your closing coordinator, those are, like, we have an assistant that works for us that helps keep that all the documents moving forward. And the escrow officer, which is what we call the title company. So we call the word settlement and closing are interchangeable. So if you ever hear somebody say settlement or closing, it's basically the same thing. That's the day you get your keys. Those people all have teams behind them often as well. So there's a lot of people involved in this process. Getting your pre-approved financing. Melissa, do you want to talk a little bit about this?
Sure. Let me get me, I got a reverb, I think, going on. I think one key part that I want to convey right from the beginning is a lot of work, especially for me, and being in this business for so long, I've learned a little things about what works and what doesn't. It's really important for me to have you set your budget, but also I gather most of the documentation that is needed to complete a process as if you bought a house today and you're closing in 30 days. So that means I'm gathering pay stubs and W-2s, tax returns if they're needed, bank statements. Those types of things are like the core part of getting pre-approved. Anyone can qualify you, and the difference in that is qualifying is just, think of it as a verbal conversation, not even a credit report being pulled. It's just simply, how much money do you make? What are your debts? And then I kind of give you this general overview of what you qualify for. To really be serious in this market is to complete that pre-approval process, because you want to have that pre-approval letter in hand when you're seriously out there looking at houses and writing an offer. A seller, a listing agent wouldn't take you seriously, and especially with the competition we have in our market. So that pre-approval letter, my dad said he gave me one name, don't screw it up, and I live and breathe by that. So my name is on that pre-approval letter. That means I've done what I'm supposed to do. So there's confidence for you, confidence for me, confidence for Jamie and Rebecca, that you understand your financing you're getting into, you understand the budget, and going in and writing your name on that contract. And maybe I'm a little sentimental even after all these years, but it all is, I get goosebumps still. I think it's a really cool process to buy your first home. So know that the process, at least through me and most lenders, most of my colleagues will do this now, the same process. So you're comfortable with knowing the next step after you got your pre-approval completed. So that's a standard of what I do, whether you buy $100,000 house or $2 million house.
Mm-hmm. And the other thing, yeah, thank you, Melissa. The other thing I'll throw in is that it is not unusual that kind of once you start thinking about buying a home, that you walk into an open house that you're driving by and you're like, oh my God, I want this house. And you haven't started the pre-approval process, and it goes under contract before you can even get your paperwork into your lender. And then you get your heart broken. And I have seen that happen multiple times. That is not an exaggeration. So we're trying to stop that from happening by at least starting this process. And even if you go through the pre-approval process and you don't buy a home for 6 months, that's fine, because she's pulled your numbers, you got your framework, you know what you're doing, you have your expenses identified, and you figured out what you'd be comfortable with, and then you start looking. Well, she can adjust those figures, and she will have to repull credit after a certain period of time, when you do find a home that you want to put an offer in on, and they would have to pull your credit again after how many days, Melissa? Do you have to repull?
Most of the time it's 90 days. It could be as much as 120.
So
That's
yeah, it's not
typically
like they have to do it every day.
credit. Yeah, no, you don't have to pull it every day. But one thing I wanted to mention that we had talked really briefly in the beginning, and I wanted to stress this is a big step. And unlike a lot of my colleagues, I do not need to pull your credit to run numbers for you. Most people have a sense of where their credit scores are today. They have a sense of what they're willing to put down, or if they need to utilize down payment assistance programs. I run numbers for people every single day that just simply want to understand, what's this loan structure look like without having to do an application and a pre-approval. I want you to be comfortable with numbers and the budget for your family, because that's really where it starts before you can really feel comfortable in taking the next step. So I don't mind running numbers on any home or just a scenario if you want me to.
Yeah, great. And thank you for that. That's really appreciated. Yeah, and then another point to using a local lender is that, especially when we're in a competitive offer situation, the lender actually goes a long way to helping sell your offer. So you have Rebecca or I at the forefront, right? So we're the ones that are out there negotiating with the other agent, with the sellers on accepting your offer. Well, so there's two offers that are basically the same, because this is not unusual. We get offers that are pretty similar. Well, if one of them is a lender that can really instill confidence that this deal is going to get to settlement, because I will tell you, people can write a contract for $1 million, and if it doesn't get to settlement, it's not worth anything. It's not worth the paper it's written on. So as real estate agents, especially when we're on the listing side, we're looking for not just the highest offer or the one with the least contingencies or things like that. Sometimes clients don't go, sometimes sellers don't go with the highest offer. That's not always the most important thing. The most important thing is getting to settlement. And if the lender drops the ball along the way, you're going to get in breach of contract and you're not going to get to settlement. And I say that because having a reputable lender on your side is part of the battle of getting your contract approved. So that's why we work with reputable lenders. So and we would say, if people come to us, especially with I call them call center lenders, which are when you call into like an 800 number and you just give them your social security number and they pull up your loan and they can't answer questions and they don't answer their phone on weekends. Those are not helping you. Those people are not helping you. If you don't have somebody's cell phone number and you cannot reach them on a weekend, they are not going to help you buy a house. That's my soapbox. I'm sorry. I get ranty about that. It's also very frustrating for us as agents when we're trying to get a pre-approval letter updated and I get an 800 number with a extension with somebody who's like, I will return to my office at 9 a.m. on Monday morning. And I'm like, not helping. So yeah, we want to make sure you get the house that you want. So yeah, ask us for referrals. You have a great person right here. You get the pre-approval, you go through your pre-approval process and you determine your loan options. There are different things. So when you talk to Melissa, she's going to ask you questions. Melissa, think of Melissa as your therapist. Well, I don't know. We're your therapist. Rebecca and I will be your therapist. We tend to be the therapy for all of our clients. What Melissa is, she's your clergy. You're going to go and confess everything to her. So you're going to tell her like how much cash you have, how much this you have. You're going to tell her if you have an inheritance coming, if you're getting a pay raise, like whatever it is, if you won the lottery, if you are not comfortable with spending X number of dollars, whatever it is, because she wants to move all those things around and come up with the best scenario for you. And she can't do that if she doesn't have the full picture. So with us, you just come and you cry on our shoulders and we tell you it's okay. We'll get you to where you want to be. There's a lot of therapy that happens in home buying. I kind of say that jokingly. It's not. People have a lot of fun. We make it fun. At any rate, and Melissa talked about the difference between a pre-approval and pre-qualification. So I don't need to go through those again. There are different mortgage options though. So that's where you're going to talk to her. Do you want to put less? You want less out of pocket? Do you want your monthly payments to be less, or do you have less money right now? And there's different ways of moving those figures around. She'll help you do that. So when you submit a purchase contract, there are terms and conditions and contingencies that are involved, right? They have to order an appraisal. 99.9% of the time, your lender is going to require you to have an appraisal. Really important to understand what an appraisal is. An appraisal protects the lender. The appraisers are there to protect, I mean, they don't work for the lender. They're actually independent third parties that the lenders contract with, but they are protecting the loan interests of the lender. And they are one person's opinion on that day, on that time, at that time, on the value of that property. And the reason I say that is there are dozens and dozens and dozens of examples just in my personal experience, and I'm sure with Melissa, that where appraisals have come in low, we've challenged appraisals, they've come up higher. We've had two appraisers look at the same property within 2 weeks of each other. I had one that had a $40,000 difference. So it is truly an opinion, and it is meant specifically to protect the interests of the lender. However, you want a good agent on your side. They're going to defend the sales. They're going to help you defend that issue, because what you don't want to do is get in a situation where you have to try to come up with additional cash funds to cover any gap in between the appraised value and the sales price. So we do the best on our side to make sure that all those numbers come together. And also a good listing agent, like the property you're buying from, hopefully they participate in this process too and help us to justify the value to the appraiser. And then you get the title. The title company, they're the people who do the closing, the settlement. That's all the same kind of ball there. They are making sure that that document you get is protected against anybody being able to lay claim to that property in the future, or saddle you with any liens or anything from past owners. So there's a lot of stuff going on behind the scenes there to make sure that by the time you get to settlement, your title is marketable and insurable. And that's kind of a real estate term for saying that it's good. It's good to go. So then you get then Melissa goes in and wires your funds to the title company and you get your keys. So we all have to be really nice to Melissa until settlement, because if you get her in a bad mood, she'll keep all your money. No, I'm totally kidding. but she will make sure that, or she's the one to make sure that all the paperwork comes to the title company, and that all the things come together and the cash shows up when it's supposed to, and you are able to get your keys. We don't need to dive super deep into this, but because we do need to be, and I didn't realize we are getting close to 5. I did promise you that we'd only be on this for an hour, but it's up to you how much you want to put down. You can put as little as 3% down on a property to purchase it. as I mentioned earlier, there are some first-time home buyer incentive programs that will help cover your closing costs. There are still opportunities depending on the type of property you're buying, depending where it is, what the price point is, how much competition there is. There is still an option for us to try to negotiate some closing costs for you. It's not every day. I can't make promises, but we do see them happening, like a couple $1,000s here or there could happen. So sometimes there's ways for us to help get that out there. The term, you're almost always going to go for a 30-year, but you could do anything from a 10-year to a 30-year. So there's all sorts of long terms you can opt for. Mentioned this earlier, principal, interest, taxes, and insurance are escrowed. So your mortgage payment consists of these 4 things. PITI, we call it PITI. So your principal and your interest will never change. Those amounts will change, as I remember that scale I did this way, but your principal and interest as a total sum will not change through the life of that mortgage. The taxes and insurance will change a little bit, as we know, so Uncle Sam will get more money every year if they can. So those will go up a little bit. When the lender collects your payment, they are escrowing those funds. So they are paying the taxes and the insurance on your behalf. They're not paying it for you. You're still paying that money. If they're taking a little portion, they're adding that on to the mortgage payment monthly, and they're putting it in an escrow account. And then twice a year, they're making those payments on your behalf because they want to make sure they're protecting their property, right? They are a part owner of this property until you pay off your mortgage. So they are going to make sure that the taxes and the insurance are paid on it. Talked about this already. The maintaining your pre-approval. This is important. Once you get pre-approved for a loan, don't go run out and buy a car. People love to do that. I don't know why. They're like, oh, my credit's great, I'm going to run out and buy a car. Don't do that. Don't change jobs unless you've already talked to your lender about it and they're aware, and especially if you're staying in the same industry, and like have that conversation first. But don't change your job. Don't go opening up credit cards. Don't go buying your furniture ahead of time. That's the other thing people like to do. They think that they're taking out like a interest-free credit card for the next 12 months, that it's not going to show up on their credit report. It does. And it has, people have been stopped the day before settlement by having opened new credit. So don't put yourself in that position. We identify your criteria. Touching on all that things, I kind of already talked about some of this, that we were going to ask you a lot of questions about where you want to be, how much space you need, this kind of stuff. And remember, if this is your first home, it might not be your dream home. If that's okay, you don't have to be there forever. It is a stepping stone to getting into your dream home. Then we go out, we find your home. We determine the houses you want to see. I kind of do a rating system a little bit. Like, honestly, we saw 3 houses today. Which one do you rank the highest? Which one do you rank the lowest? Which one is a definite no? Which one's a maybe? What do you like about these? What don't you like about these? Because the more you tell Rebecca and I about that, the more we're able to hone that search for you. And sometimes it gets to a point where you can tell us you don't like certain floor plans, or you tell us you don't like certain features about homes. And then you're like, oh, but I want to see this home. And I'm like, it has these features and these floor plans that you don't like. Do you still want to see it? And usually people are like, oh, it does? Okay, then never mind. We want to save you time. There's no sense in looking at things that you're not interested in. Again, app, we'll follow up with that. So tell us, what, if you want to unmute yourselves, has anybody started looking at homes? Have any of you started going to open houses, or are you stalking Zillow or Redfin?
We do have a question in the chat.
Oh, we do? Okay.
Yes.
Is it ever too early? It really isn't. Thank you for asking that, Kira. It's never really too early. I mean, things, to be clear, things may change. If you start a year out and you get your pre-approval process, things may change before you're ready to actually pull the trigger. But at least what I personally have run into is, one, you're going to find out if there's any hiccups. So especially if Melissa does pull your credit. So true story, when I bought my house that I'm in right now, my husband had an unpaid parking ticket in Montgomery County, Maryland, that literally stopped us. It didn't pop up until we were actually under contract already. And we had to drive to Annapolis, Annapolis, Maryland, like 2 days before settlement to pay off this ticket and get a receipt. So I'm not saying that all those things are going to show up like a year out, but you will have a better chance of catching any kind of weird things like that you might not be aware of if you start the process early. And yeah, if things change, or if your salary goes up or anything changes after that, that's fine. She can adjust after that. But it's good. I would never say, Melissa, would you ever say it's too early to at least kind of start?
No, there's so much to this process. And I think I told you before, I always say this, I play a little bit of Jeopardy when it comes to buyers because you don't really know what to ask me. So I think the extra time provides more comfort in the process.
It does. Yeah, actually, good point. Thank you. So yeah, we want to help you. We want to make sure that everything goes smoothly for you when you're ready to pull the trigger. So I think that with the most notice and the most preparation, it makes it a lot easier for you. I mean, I've been through the home buying process multiple times as a buyer. And even though I'm in this industry, when you're on the buy side and you're doing all the lending things and all that stuff, there's a lot of stuff you have to gather. And if you're trying to do something quickly, like it can get stressful, especially you have a job going on, you have other things happening in your life. You're not just sitting at your desk waiting to buy a house. So yeah, I would say go ahead and do it as early as you want. I do want to touch on a little bit, and I am sorry that I am running long on this. This is the first time I've done it virtually, and sorry. I'm sorry, I get long-winded, so I really apologize. If you do have to jump off, I will not be offended. But I do want to kind of touch on the difference between condos, townhomes, and fee simple homes. So and actually here, if you buy in DC, we also have co-ops. So there's 4 types of homes. There's 3 types of home ownership in this area and 4 types of properties, let's say. So you have co-ops are one type of ownership. I'm going to put that aside for a second. You have condos. Everybody's heard of condominiums. They're not all apartment style. So most people think of them as apartments, like a big building, high rise, whatever. Some condos are actually townhouses. So a townhouse is a style of home. It's an architectural style where you have joined properties and maybe 2 or 3 levels. Those are townhomes. Where the difference comes in is what the ownership type is. So when you have condo ownership or fee simple ownership. When you have condo ownership, you own from the drywall in. So basically you own the drywall, right? You own the drywall, you own the ability to live there, you own the airspace, you own a portion of the entire common element. You own a percentage based on your square footage. When you have a fee simple property, so a townhome or a single family home that is not a condo, there are actually condo owned single family homes, if you want to talk about confusing, usually in retirement communities. That's where you find those. But condo ownership, you're usually paying a monthly fee, right? Townhome fee simple, you own the land and the structure. The whole building is yours. The bricks are yours. The roof is yours. The land is yours. You have grass, maybe, maybe not. But that is all yours. You own it. You are responsible for maintaining all of it. In a condo, you're only responsible for maintaining what's within that drywall. So if the roof goes bad, the condo association replaces the roof. So I kind of look at the monthly fee that goes into a condo as kind of being put away into your replacement reserves for big projects that will happen in the property. I can talk to you ad nauseum about condos. I will not do that at this point, but if you have any further questions regarding specifics of condos, I served on a condo board for 10 years. I know them intimately. So happy to answer any of those questions. But there are differences. There's nothing wrong with owning a condo. My first property was a condo. I have it still today as an investment property. It's got tenants in it. So it's a great stepping stone. Condos are wonderful around here. We have a lot of them. It tends to put you in a better location if you want better commuter opportunities or close to metro. You're going to have a lower cost per square foot. And you're going to have lower upkeep, right? Because you don't have to maintain anything outside of your drywall. So, but there are some cons. New construction is also an option. And I'm going to tell you right now, if you think new construction is even remotely an option, you call Rebecca or I first. Do not set foot into a new home construction sales office without your realtor. They will not let you bring us back. And I will tell you, everything about a builder's contract is in favor of the builder. Everything they do is in favor of the builder. Everything they do is to make the builder money. And if you do not have somebody with you on your side negotiating for you, you will get rolled over very quickly by the builder and the salespeople. So I don't care how nice they are, they work for the builder. Just remember that. So please, if you're even remotely considering it, come to Rebecca or I first. One thing I will throw out there is if you are buying new construction, has anybody ever given you the new car analogy, Rebecca, where you buy the car, you drive it off the lot, and as soon as you drive it off the lot, it depreciates?
Yeah.
So there is a little bit of a new home purchase, a new construction purchase depreciation blip. Because especially if you're buying in a large community and they're still building out the rest of the community, if you needed to sell that home in 2 years or 3 years, you may still be competing against new construction. So those people will be looking basically in your same development and they're like, well, I could buy a home that's 3 years old for the same price as I could buy one that's brand new. So there's a little bit of a depreciation blip. So I don't advise people that don't plan on being in new construction for more than 5 years to do that. That's just kind of I'm not saying that you shouldn't buy new construction. People do it every day. I'm just saying that that's just something to keep in mind. When it gets to the point of making an offer, Rebecca and I are here to help you structure that in a way that is going to get you to the settlement table, get you the home you want, potentially get you the best deal we can. I am not going to lie and say we're going to be able to save you a whole bunch of money. The only way we're going to be able to do that is if it's been grossly overpriced or there's just been some other issues going on. This market is not a market in which I can promise that we're going to save you money. What I can promise you is that we're going to get you a home. And sometimes when you have, 500 people looking for 100 homes, that's a good guarantee. So that we're going to help you structure that contract in the best way possible to get you the home that you need. We also, we're going to use our expertise to give you the best advice. And one of the benefits you have about working with us is that as a listing, so I do listings a lot. I can tell you also how a listing agent is going to look at your offer, because it's important to kind of not just go in as a buyer, but you have to look at how it's going to be viewed on the other side. So I always try to make everything good on that side too. So the due diligence is the part that you get to do your home inspections. The state of Virginia is a buyer beware state. That means that we are a non-disclosure state in the sense that there are other states where they have to fill out very lengthy, multiple page forms that they check off literally everything they know about a property, when they replaced the roof last, all that stuff. We don't do that in Virginia. It's not because we don't want to, that's just the way the laws are written. So we are what's called a buyer beware state. And it is up to you to do your due diligence on a property prior to go, within your due diligence period. And that's where you have home inspections and whatnot. We're looking for, so the purpose of a home inspection is we're looking for big things. It is not a laundry list of everything that's wrong with the property. It's not that something is crooked. It's not that doorknobs are wiggly. I tell my buyers, if you can fix it with the screwdriver, it does not show up on the home inspection list. That is not something we're looking for. we're looking for something that's going to cost you a lot of money or be a large ticket item for you when you buy the home. So really like crumbling foundations, really, really bad roofs with leaks. That's not to say you might not find a home that's got an older roof, but if there's nothing wrong with it, there's nothing wrong with it. You can't force a seller to replace something that's not broken. If there's plumbing, electrical problems, leaks, we have, bad circuits, things like that. Those are things we want to take care of. We don't want your house to burn down. We don't want you to get injured. We don't want your house to get flooded. We don't want the foundation to fall down. We're looking for big things. So is there anything you want to throw out there, Melissa? What do you hear about home inspections? I'm sure you even though you're not on that side, that you hear them pop up.
I think your advice about, if you can fix it with a screwdriver, I think that's a good advice as a starting point. I think also it sets a mentality. You want to have a fair negotiation with the seller. And sometimes real estate can be, what am I trying to say? Emotional. So sellers may take some things as personal, even though they're trying to sell their home. So taking the advice of the home inspector, sticking with the bigger items, I think is a fair approach to negotiating.
Yeah, thank you. The home inspector's job is to document the current condition of the property. They're not there to tell you whether it's a good property or a bad property. They're not giving you advice per se. They may show you how to do some minor operations of the house. And they may tell you that this deserves further exploration, because they are not specialists in any of the things that they're inspecting. So they're not they're generalized inspectors. They are licensed in the state of Virginia, but they're not roofing specialists. So if they suspect there's a leak, they're going to say, you need to have this looked at by a roofing specialist. So that's kind of the purpose of the home inspector. Then we go to settlement. This is important though for your expenses. So your closing costs, when it comes to math, is to understand that 2 to 3% of the value of the property is also your closing costs. So you're 3% down. Let's just say you use minimums. So you're putting 3% down to purchase the home. And then on top of that, you're going to have another 2 to 3% of closing costs. Again, there might be opportunities for us to get, depending on incomes and what you qualify for, there might be grants out there that could help. We might have a small chance of negotiating some closing cost assistance. Again, I make no promises with that, but it does happen. So there are opportunities. Earnest money is a term you will hear used when it comes time to once you have an accepted contract, you now must put some skin in the game. And that skin is 1% of the purchase price of the home. So let's just say you're looking at a $500,000 home. You have to write a check for $5,000. That money is held in escrow until you get a settlement. The seller doesn't get it. I mean, it's just sitting, the title company's holding on to it for you. That is the money that you risk though. So that diligence period that you have, those contingencies that we have written in your contract, they are all to protect that earnest money. So you have the ability to void a contract for reasons within the contingency framework, and get that earnest money deposit back. Once those contingencies have expired, and we'll tell you that, we'll be like, okay, that was our last contingency, so it's now or never. That is, then you're buying a house. And if you wake up on the day before settlement and you change your mind and you decide that you're not going to buy that house anymore because, I don't know, you had a dream. And I'm being funny, but literally we've heard these things, right? You will lose that earnest money deposit that is now goes to the seller. The home inspections are a fee paid outside of what the estimate is that Melissa would give you. So almost all the loan estimate that Melissa would give you for the value for the purchasing of your property is going to include everything except your inspections. It will, and your home warranty. But it would include your property survey. It would include your homeowner's insurance. It's going to include your closing costs. And your earnest money deposit is not additional money, it's just upfront money. So it will not include the home inspections. And depending what you're doing, that range is anywhere from $400 to $800, unless you're buying like a super massive mansion, and then it can be larger. The survey is the plat map when they come out and they stake out the property. If you're buying a condo or really a townhouse, I would say save your money, don't worry about those. But if you're buying a single family home, you want to get a property survey done. Home warranty, that's an option for you. It covers your home for the first year that you own it. Sometimes that's something we can get the seller to pay for. So again, that's something sometimes we can get done on your behalf. That's kind of the picture, the budget that you will need for the additional expenses. So I would say for budgeting purposes, on the low end of buying a home, you want to assume 6% of the purchase price of whatever you're thinking of buying. And then the high end it'll go higher based on how much of a down payment, more down payment you want to do. And then that's it, right? You're just waiting for settlement. We get past all these contingencies. You're waiting with anticipation. You're starting to think about what paint colors you want to do. You're plotting. You're not buying any furniture. Remember, I told you don't go buy your furniture yet. But you just got to stay in control of those finances. You want to make sure that you are getting back to your lender as soon as possible. And Rebecca, like, she's going to call you. She's going to ask you for things, and you need to respond to her quickly. You're going to communicate with us really regularly. It says once a week, but I'm telling you, at the beginning, you're talking to us every day, twice a day, 10 times a day. Sometimes you're texting me while I'm eating dinner. We will be in communication. And then we're going to confirm everything right before you get to settlement. We're going to get your funds. We're going to wire your settlement funds to the title company. You are going to pay attention so that no fraud happens. You are going to listen to us. You are not going to go rogue. You are not going to go giving money to random strangers that email you. I am not joking. Right, Melissa? Am I joking?
No, you're not.
And then right before that, Rebecca and I will do the final walkthrough with you. We'll make sure that everything is in condition as it was when you put the offer in. If there were repairs that were supposed to be done, we'll make sure that those repairs were completed. It is not a time to go decide that you don't like the paint color in a room. It is just making sure that they didn't run off with the appliances or punch holes in the walls. We will remind you of this before settlement, but you would bring your wire funds or your your cashier's check, your insurance, your government issued ID, very important, got to be valid ID. So if you know you're getting close to expiration, and this is actually something important you ask about starting process early. If you think you are going to be, if your ID is going to expire, or if you're using a passport or something that's going to expire, you want to make sure it is not expired. The title company will not let you close without a valid ID. And then you move in. There you go. And then you move in, you enjoy your home, you come to us for any questions about repairs that you need to make. Moving on, like, I still to this day am involved in a lot of my client, like, they come to me asking me for recommendations for contractors. I have one client who sends me the quotes every time she gets a quote for something, for a repair work or something. She'll send it to me and say, like, does this sound right? Do you have somebody else you want to recommend? So will this add value to my home? I have been a part of architectural discussions for improvements to people's homes. We are your partner in this home ownership thing. So Rebecca and I are a resource for you through the life of your home. Are there any questions that we did not cover? And I think Kara had to jump off. So Don, you're the only one left. You're the last man standing.
And it ended just before I had a 5:30, so that actually worked out perfectly. I was in the middle of typing in the chat for y'all. Thank you very much. This was phenomenal, much better than I had first anticipated, and I appreciate it.
Oh, why, thank you. And my apologies for running late. I am very sorry about that. I'm glad you were able to stick with us.
That's completely fine. Honestly, I I'm a renter. I'm renting with my wife currently, and we received one of the informational flyers in our mail. And we are probably farther away from being ready for the process than we'd imagine, but it is definitely something that we want to. And I never knew of any of y'all before this, and now I can honestly say you're one of the first entities out there I would trust and be one of my first calls when we're able to actually look into it. So I appreciate that.
Thank you. I really appreciate that. We look forward to working with you.
Me as well. And we are looking into moving between November and January at the end of our terms, and we're evaluating if purchasing over renting again is in the cards. So this was good information, and I have your information in case that happens.
Okay, great. Well, thank you so much for joining us.
Thank you all. I appreciate you, and I hope you have the rest of the night.
Okay, you too.
Bye-bye.
Take care. Bye-bye.
You too. Thank you.